very warm welcome to you as you join us on yet another episode of Tax Matters. My name is Olumoyiwa Matuluko. The hours are ticking by, and the days of December 2011 are gradually moving us towards the end of the year. It is our prayer that we will all be here to witness 2012. Last episode, we took you on a whistle-stop trip around happenings in the world of taxation in Nigeria. There were 4 major events, and we did promise that starting from this episode, we will begin to dwell on each of those events in greater detail. One of them was the regional enlarged management meeting of the Federal Inland Revenue Service formations in Lagos, Lagos Island Region, Lagos Mainland Region, Light Tax Office Non-Oil Lagos, and the Light Tax Office Oil and Gas. Today on this episode of Tax Matters, we will tell you whatever remains to be told about the Thursday event, and then we'll quickly move on to the Stakeholders Forum on Friday. My name is Olumoyiwa Matuluko, and the program is Tax Matters. At the takeoff of the regional enlarged management meeting in Lagos, the executive chairman of the FRS, who was on our way to Lagos from the 125th meeting of the Joint Tax Board in Lokoja, Kogi State, was represented by the coordinating director in our office, Alhaji Abdullahi Atta.
As you may have noted, the Lagos REAM and the Town Hall meeting for 2011 have been combined into one instead of 2 separate meetings for ease of convenience and logistics on the part of management of the service. Recently, as part of our management strategy to serve taxpayers better and to adopt appropriate measures to address taxpayers' needs and peculiar circumstances, 6 million tax offices (MTOs) have been established, of which 2 are located in Lagos. One is located on the island and the other on the mainland.
Consequent upon this new configuration, the Federal Inland Revenue Service now has 3 levels of taxpayer segregation. Large taxpayer offices devoted to taxpayers with turnover above 1 billion naira, medium tax offices devoted to taxpayers with turnover between 200 million and 999 million naira, and the small and micro tax offices devoted to taxpayers with turnover below 200 million naira. Executive Chairman of the Lagos State Internal Revenue Service, Mr. Babatunde Fowler, led a powerful delegation of the LRS to the regional enlarged management meeting.
It's always a pleasure and a privilege to be among you. In Lagos State, the Board of Internal Revenue see us and see you as one. We may be collecting different taxes. It is clear that this country and all states have no option than to continue to increase the internally generated revenue through taxation. So I see ourselves between, the deep blue sea and the hard rock. Government on one side asking you to do more, the taxpayer on the other side telling you to not to kill them. So we have to find that happy medium while obeying the law, making sure that the right thing is done. I'd like to put and confirm that we're always willing to be of assistance, and at any point in time, our offices are always open to share information, because when you're dealing with a taxpayer, we all know that taxpayers sometimes have a couple of records, one for you, one for us, and one for the bank. Now, in dealing with these taxpayers, they'll find it very difficult, even if they can fool their bankers. They can't use the same records to fool you and to fool us. And in sharing that information, we'll enforce the taxpayer to pay the correct amount of taxes. We can enforce taxpayers to pay, but I think what we have to do most of all is to encourage them to be 100% compliant through the use of taxpayers' money both at the federal and state levels. And I think that as those in authority continue to use this tax revenue in a way that can be clearly seen and demonstrated, it will also be easier for us to perform our own duties.
Several papers aimed at building the capacity of staff and by so doing increasing revenue yield were presented at the regional enlarged management meeting.
The Federal Inland Revenue Service introduces the tax card to make all tax payment easy for you. Just follow these 7 easy steps. Obtain your taxpayer identification number, TIN, for free at any FIRS office. Get your tax card from your bank. Log on to www.firsonline.com. Then register to obtain a password and access the payment process pages. Fill your TIN number, tax type you're paying, amount payable, and period of payment. Confirm the entries on your transaction. Then print your e-ticket and present at any FIRS office as an evidence of tax paid. It's that simple. For more information, visit www.firs.gov.ng or any FIRS office close to you. FIRS. It pays to pay your tax.
Welcome back. The day after the regional enlarged management meeting, that is talking about Friday, the 25th of November, the now popular Stakeholders Forum took place at the same venue. In his opening remarks, Coordinating Director, Compliance and Enforcement Group at the FIRS, Mr. Oyekachi Hedioha, had this to say.
This is a forum for us to interact with the taxpayers, especially the consultant, and the purpose is to look at critical areas that are very challenging to tax administration.
Mr. Hedioha seized the occasion to talk about the Tax Appeal Tribunal.
So there is no problem we cannot resolve together and amicably. There are instruments through which some dispute could be resolved, like the TATs here, which is a voluntary forum. The advantage about TAT, it facilitates the dispute resolution more than the normal court.
Still on opening remarks, the executive chairman of the FIRS herself set the tone for the interactive session in this way.
I'd like to welcome taxpayers to this event. This is the second time we're meeting in Lagos. And I think what we also owe you is what progress we have made since the last time we met. And as I say this, I know there are some areas that there's still some outstanding work to do. Maybe I should start with that and get that out of the way. We still have, we know, issues still unresolved on withholding tax credit notes. We know that. And we really are trying to come up with a solution to this that will be of benefit, to all of us. We also know that in the area of tax reforms, there's been a slow pace of actually doing the audits and coming back with a clear approval as to what reform is due to you. And as a result, we also have some outstanding requests in this regard. But at the same time, in the tax reform area, what we have done, though, is that we've clarified what the reform guidelines are, because I know that was asked of us last week. Some of you do not know what these guidelines are. We're not even aware that these guidelines are available. And so please do not hesitate to ask the respective tax offices for these guidelines. And it should actually be part of the pack that we give you when you come to these kinds of sessions. We have also, since the last meeting, worked with to ensure that the Personal Income Tax Amendment Bill was passed. And that was passed by the 6th National Assembly, awaiting assent by Mr. President. We've also developed quite a number of regulations that we believe will help solve some of the problems some of you have, or issues that have been on the table for a long time, and also at the same time facilitate growth in the economy. One such regulation is on self-assessment. And the objective of that is to ensure that we really implement beyond what we have in the law, but that we also have regulations to guide the implementation of the self-assessment regime that we've been talking about for a very long time. Another regulation that we've worked on for the financial institutions that are here, or for those who are in the capital market who may be here today, is that, and actually not so much a regulation, but a presidential order, which will be presented to the president on the waivers on bonds, waiver of tax on bonds. Again, that is pending, but that's out of the service, and we're working hard to ensure that the relevant approval processes are gone through. For those of you here who may be NGOs, some of you have been waiting to be listed on the 5th schedule of SITA for some time. And we've kept on assuring you that we don't want a situation where we're actually dealing every time we want a listing, because we had quite about 50 or close to 50 or more requests for listing on the 5th schedule. And the process, for each time, you come through is a pretty long process. And so we ask you to be patient, and that we're going to work on regulations that will, rather than request for these listings to be done on an individual NGO basis, to first of all provide clear guidelines and direction on what areas of focus of NGO will benefit from this listing. And then based on that, there will be very clear checklists, very clear rules in the regulation that will make it clear to any NGO as to what the requirements are to be listed on the 5th schedule. We've concluded that regulation and also forwarded that to the Ministry of Finance for approval. We've also recently, for those who fall within the turnover brackets of 200 million to 999 million, created medium tax offices, just like we have large payer tax offices, to focus more on your needs. And for those who also don't fall within that bracket and are within the bracket of less than 200 million, the other ITOs will now be better focused on your needs. So that way we are deepening our market segmentation and aligning our services more towards the various market segments. A derivative of that will be that hopefully more and more policies, processes will be aligned to tailor to each of the relevant market segments. We also hope with this further market segmentation that we'll have, for example, clearer policies around small and micro business. One area, for example, that I know has been on the table, which we really haven't addressed and we hope will be better addressed as we move forward, will be the request by small business, primarily small business, who have registered for a very long time, have not filed any returns, and now because of the reforms now want to start filing returns, are now forced to pay huge penalties because of the time that they have lapsed in filing returns. We truly understand that need. We haven't addressed it, but just to let you know that it is something that we want to address, and we realize it's actually within the board's power, to approve. And once, the relevant work is done by the relevant department, we hope we'll be able to announce such a statement of position on that issue. One project that I don't know whether you have been fully briefed on, but was approved as of the last time we met, is the Unique Taxpayer Identification Number project. Now, we all have the FRS team, but we're all going to be migrating from the FRS team to the U team, just to make sure that we have common standards across revenue authorities. So the Unique Taxpayer Identification Number project is meant to address that and come up with a unique taxpayer identifier, which once you have it, can be used wherever you are in the country. And what we're trying to do is ensure that once you have a taxpayer identification number, wherever you move, you go with that number. Another thing that we're doing is, again, in terms of providing service to you as taxpayers, we're ensuring that the web portal through which we record your payments, through which we assess, or at least the information we get today that supplements the information that you give us, we're ensuring the integrity of that web portal. Because we're also aware that even with the FRS team, some of you have duplicate TIN numbers. There are issues even in some of the TIN numbers that have been issued, and there are issues in terms of even the information that is on the web portal. Another issue that we had some complaints about at the last minute was that our circulars are not available on our website. We've tried to improve on that, in terms of providing additional information on the website. We're also working on new draft laws, and we hope by the end of this year to at least have approved, because we've had stakeholder sessions on this, the tax administration code to make it simpler for the taxpayer, value-added tax, We are revising that with all the ambiguities in the current VAT law. So a completely new VAT law is being developed. We're also working on an income tax law to incorporate all the different types of income taxes we have, so that way there's clear alignment and consistency across all taxes on income. And then we're also working on all federally collected taxes, a law around that. So these are just some of the things that we've been doing in the last year, as we've also worked towards ensuring that we grow the revenue base for government. And we know that we couldn't have even gone as far as we have so far without your support, without your cooperation. And we're looking forward to you using this meeting to see how we can further work with you, knowing fully well that, we're not perfect, and so we're constantly looking for ways to improve on what we have started and to get your support in ensuring that we grow revenues for the development of our country.
Immediately thereafter, the questions began to roll in, but not before foremost tax practitioner and past president of the CITN, Chief J.B. Okele, had his say.
May I just make a few comments? The first one I would like to point out, with due respect, sir, is that I have observed over the years that there has been too much concentration of authority at the headquarters of FRS in Abuja. I'm saying this with regard to certain developments which I have witnessed over the years, because we have these area tax controllers. And to the best of my information, quite a number of them are not able to take a decision on the spot without first of all getting in touch with Abuja. Now, the case in point which most of us who are practitioners are aware, is that a taxpayer receives an assessment notice, be it BOJ, whatever. The taxpayer says, I don't agree with this. My liability is X naira. He files his objection, and the next thing you hear is that the same office that issued the assessment notice will write back to say your objection is invalid, which I believe you cannot be a judge and an accuser in the same matter. The procedure for dealing with disputed assessment is quite clear. Number 3, I want to distinguish between tax audit and tax investigation. I cannot understand why we are mixing these two up. It is part of the responsibility of FRS to routinely check the returns, especially now we have the self-assessment system. The returns filed by individual taxpayers on a routine basis. It could be one every 2 years or one every 3 years. But that does not mean that there cannot be investigation. But what I have discovered of recent is that there is no distinction between tax audit and tax investigation. And this is rather a cumbersome exercise. And in most cases, when these tax audits are to take place, they are covering a period of not less than 6 years. I believe if, as a routine basis, you are to carry out tax audits for every taxpayer that has filed self-assessment, this should be done on either every 2 years or maximum 3 years. But that should not stop the revenue from carrying out investigation, covering as many years as possible, so long as there is a justification for it. Number 6, I would like FRS to give appropriate recognition to the Chartered Institute of Taxation of Nigeria, which is the only institution recognized by law in Nigeria to regulate the practice of tax in this country. Now, two other issues. The one is certificate of acceptance on capital expenditure on fixed assets. With due respect, sir, it appears this decree number 53 of 1970 is outdated, it's out of use. But I've seen correspondence from other offices insisting that every company must produce this certificate. Whereas FRS issued a circular some years ago saying that if you can produce the invoice with which you purchase this asset, nothing should stop you from claiming capital allowances on the asset.
Immediate responses came to Chief Okele's observations. We want to share some of that with you.
On concentration of responsibility without due authority, I think our management, to an extent, allows officers at the various levels, tax controllers, regional coordinators, directors, to take some decisions at their level and brief management. But with a particular example of an office raising a BOJ and the company or the consultant disagrees and comes back with a document or the returns which should form the basis of assessment, and the officer is saying, sorry, it's gone to headquarters. That was just for a period of about a year. Don't discharge any assessment. That was to instill some discipline after all. But I tell you, it's no longer happening so, sir. In fact, there was a circular issued by the FOPP recently which prescribed limits of authority to discharge. So that has been addressed. And the fact again that with the introduction of the self-assessment, there will be no basis for raising BOG assessment. If you fail to file your returns, we will follow you up. We will ensure that you submit the returns, because what we want is information to enable us do risk profiling on the companies, not just your money. The money is important, we will have it, but we want to do it properly.
On our issue of discharging assessments, when our respectable Mr. Okele spoke, he was talking on centralization of control at the headquarters. Some of these things, they are born on a process the service has put in place, like an audit assessment, which he has objected to, and such objections, the assessment was raised by the ITO or by the region. We explained that since we raised that assessment and he has objected to it, he went ahead and paid the one he agreed. The system does not allow me, who raised the same assessment, to discharge the difference. I need to trigger it up to my superiors to look at what he complained upon and our own position. So these issues are really for control purposes.
And on the distinction between tax audit and investigation.
In terms of the difference between routine tax audit and investigation, that we're mixing it up, I would like, first of all, Onyegbele to tell us, as the head of the self-assessment project, what we're putting in place in the various offices to really make self-assessment work the way it is supposed to work. Because when you even talk about routine tax audit, we don't even want tax audit to be routine. We want it to be risk-based, not routine. And then Segosime will talk about the kind of audits we're talking about, because we're putting in place manuals to guide our officers, training them. So I think once Segosime talks about the audit in detail, you'll be able to realize that what we're discussing as audit is not investigation.
The tax audit is not going to be routine in nature. We have criteria for selection of cases for audit now. Some few criteria. Some of them are mandatory. For instance, if you ask for tax refund, it becomes mandatory that you must go for tax audits. For instance, if there is change in accounting date, of course you know the regular section of the law is there, it becomes mandatory that you must go for tax audits. Some others are not mandatory. They will be triggered by the kind of returns that you make.
Viewers, we are afraid that this is all time will permit us to take on this interactive forum today. Next episode, we will immediately begin taking the questions and the answers, because indeed, those questions, those observations, and the answers and clarifications given to them adequately represent what we have in mind. We want to thank you for watching, and we wish you a blessed week ahead.